Hello there and welcome to Core Finance, where I'm joined by Alessio Rastani from leadingtrader.com. How are you today, Alessio?
Yeah, good to be here. Thanks for having me.
I regard you as a kindred spirit. And we will see, but only in the stock market sense,
right.
and only in finances. Not any. You're obviously much superior to me in many ways. Let's have a look at the charts you brought in.
Right.
Bitcoin, one of my favorite markets.
Oh, yes.
It's as if you designed this series of slides for me.
I guess this is like candy bait to a lot of folks these days. People half my age, obviously. Bitcoin obviously is in the news. Now, I want to talk about Bitcoin and where we are right now and where we're potentially heading. But before we go on to discuss Bitcoin, guys, I wonder if you just go to the next chart just for a minute, because I want to bring this to your attention. Now, I thought this would be interesting to talk about because there was an interesting article in the Wall Street Journal, and I think it was Market Watch as well. And they said, look, millennials, or the young people these days, people who are born, essentially millennials, for those of you not aware, people who are born, I think, between 1980 and the millennium. But anyway, apparently these folks are not learning the lessons of their own parents, which is why I wanted to put this chart.
Nobody would want to do that. And that's the most foolish thing you can do.
Exactly. Who does that, right? Yeah. But honestly, I mean, Zach, I'm done trying to going back over the past. And I think it's there's a lesson to be learned, and I think many people have heard this, that if you don't learn the lessons of history, you're bound or doomed to repeat it. So if you just go to that chart, so look, we've had the .com crash. This is what our parents went through, 2000, 2003. The big tech wreck, as they call it, when the technology stocks massively rallied. I mean, here's the thing. That could be the chart of almost something we know these days has happened. Then you got the real estate market and the stock market crash of 2007, 2008. Massive 50% drop there. And then you got the gold crash of 2013. Believe me, Zach, that I still know folks who refuse to even admit that gold was a bubble back then. Some people are just so deluded that they think, you know what, something can just go to the moon and not come back. So, you had these three major crashes, and as the Wall Street Journal was saying, people are never going to learn from the lessons of the past, which is why I think nobody is going to learn. Well, very few people today, if we go back to that Bitcoin chart, guys, very few people are going to ever admit that Bitcoin is ever going to have the same sort of consequence. And I think Bitcoin eventually is going to be a victim of its own success. Now, having said that, I think there is one good thing about Bitcoin, which is it has persuaded and inspired a lot of young folks to invest, which is a good thing. Now, whether it's Bitcoin or something else, fine. I do want to just talk about Bitcoin and where we are right now. By the way, any thoughts on what I just said, Zach, before I...
It's very, very profound stuff.
Very profound. Well, like I said, I'm done just talking about it. I mean, mentioning it always. But anyway, one of the things I love about this chart, and we just take a look at this, is that what I recommend is on your daily chart, put 100 simple moving average, which is the brown line you see in my chart, 100 SMA. Because the majority of corrections, especially in an uptrend, do actually complete, or we see a C wave completion, ABC correction. For those of you who follow Elliott waves, that simply means that an ABC correction simply says that most corrections are formed of three sections or three waves, ABC. Now, in my experience, the majority of these corrections, ABC corrections, actually complete at the 100 SMA, which, by the way, is the weekly 21 moving average. Okay, I'm hoping I haven't lost everyone just by now.
This is great. I mean, this is great because now you just if you like Bitcoin, you're waiting for the dip towards $2,200 before you. I mean, you have a dynamic entry point there, and basically you could almost put the order in like $50 to $100 below the 100-day moving average because it tends to overshoot a bit. And you can sell out maybe $50 to $100 above the 10-day or whatever. Yeah, what is that? The 21.
Yeah, that's the 21. That's the purple line.
Yes, exactly. So basically, you can use it, but people obviously don't have that discipline.
I guess not. No, but I would recommend. Look, I got this actually from BitcoinCharts.com, which almost anybody can access the free chart there on Bitcoin. But here's the thing. So we can see that Bitcoin has had a C wave, ABC wave correction. Just recently this month in July. We've completed, that correction appears by that 100 SMA and the 2000 level on Bitcoin and psychological support. We've managed to rally, and now we've had a pullback. We had a pullback just yesterday to the 21 exponential moving average, the purple line. And I'm expecting this wave 5 to continue now higher. So I'm looking for higher prices on Bitcoin for now. So that should certainly, for Bitcoin fans out there, might be good news for you guys. If we go to the next chart, guys, okay, El Dorado. So
it's the search for El Dorado.
Search for El Dorado Gold. Now, I think you just mentioned before we started the show that you like this chart. Let's not get ahead of ourselves. Yeah. So why do you like this chart?
No, I just think that here you've got a situation where you've got let's say at the very least the shares are in a small range, wait for a range breakout. Obviously, given where they've come from, there is a chance that there'll be some momentum there, and also given the way that the shares have been pent up basically between $2 and $4 for the last year and a half, there should be quite a move.
Absolutely. I remember back in 2012 when I was first interested in purchasing the stock was about, I think it was about $16, as you can see from this chart. The peak was in 2011, obviously, about $22. It's fallen dramatically. I mean, this is just crazy. It's insane drop you can see on this stock, El Dorado Gold. The fundamentals are actually good. Having said that, there is actually a much better stock than this, which I've actually talked to the premium members on Leading Trader. But anyway, El Dorado Gold is okay. I'm looking for a breakout on that triangular formation. I would say this: you could probably start nibbling on the stock. Maybe start building a small position, not too much risk, and then when we get above $3, or what you could do, just wait until when we close above $3 or 2. Where are we now? 2.5. Okay, so we close above 3. Then that would signify a potential signal to get in and maybe get long on this. So it stops beneath the lows there. I mean, this has got plenty of upside potential with minimum downside risk.
Sounds good. The only thing there is obviously, are we now finally in 2017 at the end point of this bear run that's been there in the gold mining sector? I
mean, actually, one more thing. Actually, I wonder if you just go back to that El Dorado chart. I forgot to mention, we are now at the support, a major support, the 2009 lows and the 2016, almost the 2016 lows. So I would say this is a high probability setup. El Dorado is not bad. It seems that we've completed the wave 5 correction. If we just go to the next chart, guys. Now, retail. I would say if there's something that is probably a screaming buy right now, well, maybe not right now, but very soon. This is it, retail stocks ETF, or just retail stocks in general. Now, I talked to you about this, Zach, I think a little bit last week, because a lot of retail companies, apparently it's pronounced Abercrombie and Fitch, not what I said, Abercrombie and Fitch. Apparently that's wrong.
Maybe Americans say it like that.
And then you got Macy's and you got JCPenney. As a matter of fact, JCPenney is doing pretty better. Since we've talked about this, actually it's gone up slightly. But retail stocks, keep an eye on them, guys, because this is a severely oversold market. And here's the thing. Wall Street is now getting people to bet against retail stocks. I mean, if there's ever a sure sign of a market bottoming is when Wall Street develops inverse ETFs. That's what I've heard. It was published in the Wall Street Journal recently.
Kiss of death.
Exactly. When Wall Street is trying to get in on the game of getting people to short retail stocks or bet against them, that something is about to bottom here. So we take a look at that chart of retail, EAT Stocks ETF, XRT. We are now at getting close to a major support. I think that we're potentially going to see some sort of reversal around here, and beginning to see some divergences. I would look for a close above 41 before I'd be interested in getting long on retail. We're looking for that wave 5, the wave 5 move up there, which means, of course, if retail stocks go up, the ETF, the index goes up. That could certainly put some upward pressure on the actual stocks, which we're going to talk about now. I've selected one of these. Now, you were mentioning Macy's just before.
This is the one I wrote about it 2 or 3 weeks ago on a leading website, and it got like about 3,000 views in about 6 minutes.
Wow.
And then mysteriously, the link disappeared, and people who actually run the website couldn't find the story.
Right. Okay, so tell me what's the story again?
It was that Amazon has already made an offer for Macy's, which has been rejected.
Been rejected.
At $38. The problem with Amazon is that if the story leaks, that's the condition. They walk away.
Oops, that story has been leaked.
So in fact, so basically, if the fact that there's no, you've got a sort of loop now that in fact you don't actually know whether the story was actually just a pie in the sky, or whether because Amazon saw that the story leaked, they've taken away the offer.
Has this rumor got any substance to it? Do you think?
It will if the shares break $24.
So that's interesting. I would say, look, if that rumor, there's an old saying I think everyone knows: buy on the rumor, sell on the news. If that rumor has any substance to it, as Zach says, guys, keep an eye on it, because if we break that triangular falling wedge formation,
it's a beautiful setup. But I mean, basically, since also as soon as I wrote it, the shares plummeted.
Really?
And then they rallied again. They plummeted. They've had 3 flush outs since I wrote it.
3 flush outs.
3, and now it's finally breaking out. So I sort of feel that actually they're just trying to get rid of the last people along with that stock, and then
shaking out the weak hands. I agree. I would say we got major resistance on Macys at 28. For those of you who want to play this a bit more safely, wait for a close above 28. Otherwise, you can start nibbling on the position if we see a breakout through the triangular formation. But I think that this could be a good one here for the long term. Again, these are buy and hold long term.
Okay, well, basically out of time, is there?
Yeah, okay, great. Thanks very much.
Okay, well, we'll see how Macys does. Alessio Rastani from leadingtrader.com. You've had your money's worth on this one. Hopefully we'll see you again soon.
Thanks again.
Okay.